Hello, I'm Lance with Verivest, and today I have with me Ryan Schmidt with Rise Capital. How you doing, Ryan?
Well, thanks for having me.
Yeah, my pleasure. Hey, so why don't you share a little bit with us about how you got into the real estate business?
Absolutely. My dad, when I was a little kid, my dad had one rental property, and I remember just from being a little kid, the renters would come over and they would drop off the rent check with my dad in person. So I thought, well, that's really neat. So it was, simplistic, but I'm like, okay, my dad just got a nice check there. So I always wanted to do real estate, and my original goal was to buy 10 single family homes, and I kind of progressed from there and bought a bunch more than that, and then we can expand on this maybe further on down the line, but I partnered with a couple other guys and we started buying apartment complexes. So that's how I originally was interested in real estate.
Got it. And you're also a commercial pilot, is that correct?
Yes. So I fly for a company called Endeavor Air. We're one of the subsidiaries for Delta. I've been with them since 2005, and it's really great for the real estate aspect also, because I can go jump on basically any flight. So it's very helpful if we need to get to a property quickly, or go take a look at a property in a quick fashion. That's my ticket there. So I really enjoy the flying job. It's taken a backseat to real estate at this time, but yes, still a commercial pilot.
It's nice to have that pilot's license and the ability to jump on planes and get where you need to go. So so for you guys, so you're based in the Twin Cities in Minnesota, but you acquire deals sort of throughout the Midwest. I mean, how do you source your deal flow? Where do you find the opportunities that you guys take a look at?
Yes. So like you said, our office is in Forest Lake, Minnesota. It's about 30 minutes north of St. Paul. Sitting here in the office right now. We got a couple, you can't see it, but a few more offices up to the right of me here. But finding deals. We love searching for deals. So different avenues include being contacted from prior brokers. So brokers that we've done deals with in the past, and they were happy with how the transactions went. So they reach out to us again and they say, the last one went well. Do you want to buy another one from us? So that's a common avenue. We're also on some of the more traditional means, internet searching, a lot of internet searches, and then we're on a lot of listings or email blasts, both from on-market listings and off-market listings also. And then we'll occasionally get a call from somebody that they heard we buy apartment complexes, and they call us and, hey, are you interested in selling your complex to us? So I would say those are some of the main ways that we go after our deals.
Mm-hmm. So for you guys, the markets that you generally look at, why don't you share a little bit about, kind of your philosophy around, market selection, and because I know that you cover, quite a bit of ground, and why you've decided to do that.
Certainly. We focus on tertiary markets, which is really just a fancy way of saying properties that are outside of major metropolitan areas. So we kind of venture into some of the smaller cities and areas, and we still have a lot of properties in larger cities also, but we prefer some of the smaller cities actually. So we look for B and C types of properties. So strong value add plays are really what we're going after here. And I can maybe talk more about this right now or later, but just some of the things that we try to value add and things we try to improve with the properties. I could talk about it now or later. I'm not sure.
Yeah, I mean, I think, go ahead and share a little bit. I mean, I guess the markets in particular, I think, what do you guys do some stuff in Oklahoma City area and some Iowa, Arkansas. So maybe just give a little bit of, why those particular tertiary markets. I mean, I guess in the case of Oklahoma City, it's probably not, it's probably more of a secondary market, but, so is there a method to the madness in terms of, which ones in particular? I mean, is it certain at least minimum population size or, certain sort of economic base that you're looking for? And maybe just touch on a couple of those things.
Certainly. So populations, we tend to range from 10, 15,000 at a minimum, up to probably 500,000 as a maximum is some general guidelines for us. Income, typically middle income types of residents are who we're working with, good working class folks. And so we think that's an area, we think we feel strongly that it's a safe market to be in as far as strong cash flowing properties and at the same time, just nice, stable markets. So a lot of folks venture into the much larger markets, and I'm glad it works for them. It's just we've taken a slightly different approach to where we're taking things.
Do you find there's less competition in those markets? I mean, in terms of, or do you find yourself in multiple bid situations, or is it how does that work when you're kind of operating in those types of markets?
Yeah, that's a great question. So definitely less competition, and we like that because you get a property that has 10, 15, 20 bidders on it. The price gets driven up dramatically, and margins really get squeezed out in those scenarios. So yes, when we get into these smaller markets, typically we're looked at as the best buyer among maybe a couple other buyer groups. So it puts us at a distinct advantage. We can go in there and say, yep, we've purchased 3, 4, 5, 6 properties just like this, and we're ready to buy another one, and we're good closers. So you should really look at our group.
Yeah. And for you guys, when you are assessing deals, like what, when you say value add strategy, is it, are you looking for, mismanagement or absentee owners, or are you looking at it where there's just, the market rents are X and for whatever reason, which I guess would be a form of mismanagement, is it, how do you tend to, what do you gravitate toward, when you've got deals that you're assessing in terms of, the opportunity?
Yes. Interestingly enough, we like properties with issues. Sometimes the more issues, the better. So we like properties with expenses that are too high, properties that have management issues, properties that have occupancy issues. Those are the properties where we find the best deals, the best pricing. So we just love that. We've got a strong team here, so we love closing the deal and then immediately going in and trying to fix those issues. A lot of times it's real simple stuff that can be changed. Sometimes it's a little more involved than that, but we love that feeling of taking on a property that is running poorly and deploying our team and trying to fix those issues.
And then how are you, like when you're deciding the price that you're willing to pay and all those, are you kind of a below replacement cost type of situation, or is that weigh heavily into your, how you're assessing the deal? Often I'm assuming that you're, whatever the market price, if it's listed, or on market is X. Are you guys, you wind up walking away from a lot of deals, that you put offers in on, or?
I don't walk away from too many deals that I put offers in because I do a lot of due diligence before I ever put that offer in. So I'll look at 100 properties before I really kind of lean into one. And it's amazing how much information you can find just from your office. There's a ton of stuff I can do right in my office here to see if a deal even makes sense for us. But we believe in a couple things. So one is buying at a good price on the front end. If you don't get that good price right from the beginning, man, you really hog tie yourself. It's difficult from there on out. So we look at a couple things. We look at the initial price up front, and then we look at the cash flow on the property. So we tend to lean more into cash flow. That's kind of our underlying philosophy, or our wealth building concept around here is cash flow first and equity second. But don't ever forget about the equity side of things, because if you cash flow a property, great for years and years, but on the back end you sell it for a whole bunch less than what you bought it for, you didn't do yourself any favors there. So it's a multifaceted approach.
Got it. Yeah. So, and I guess that to another way, then it means you're probably not doing too many deep value add deals. You're not going to try to reposition an asset where you're going to kind of go backwards, or do you guys do that kind of stuff?
So to date, we haven't done large rehab projects, although we are interested in one if the right deal surfaces. But our for the most part, our changes or the way that we operate the property are simplistic in nature. So I'll give you a couple quick examples. We just purchased a property that the former management group, they weren't answering the phone after 4:30. Well, that doesn't work too well, because people are at work all day, and then they come home and they want a place they're going to start looking for a place to live. Okay. So that was an easy change that we made. We simply we created a phone tree system. So now when somebody calls in, it rings to 5 phones simultaneously. Whoever picks up the phone takes the call, and we're well equipped for any of us to take the call. So it's great. Just a simple little change like that. It wasn't expensive. It wasn't even that big of thinking type of idea. It was just simplistic, and that is, when somebody calls, we need to answer the phone. Dog parks, little minor rehabs here and there, maintenance that is easy to contact, and they show up when they say they're going to show up. Things like that are just, those are the things we put in place to try to really add value to the operation.
And so it sounds like you guys do your own property management.
Yes. So property management is done in-house. So when we acquire a property, we will find a manager, an on-site manager, and then that rolls up through our guys here in the office, Josh and Joe, that work with us. We love that. We love that model because we have so much passion for what we do. So we like to manage these properties on our own accord. We feel that offers the best returns for us, for the investors. Kind of everybody wins out in that scenario. We try to have our on-site managers be as competent and capable and have the right tools in their hands as possible. So when they have a situation come to them, they know how to handle it. If they need help, we're here to help up in the cities. Our maintenance folks, we try to find maintenance people that can go the extra mile. So folks that can do the plumbing or electrical or flooring, so we don't have to hire that stuff externally, which is incredibly expensive. So those are just some of the ways that we try to reduce expenses right from the get-go and throughout the operation.
Mm-hmm. Very good. So, in terms of, you mentioned a few of the people on the team, but if you wouldn't mind just kind of highlighting some of the other key players that are involved, that are, critical in sort of executing the, acquisition strategy and the asset management strategy.
Certainly. The partners are myself. I grew up in Minnesota, and like I said, I've always had a passion for real estate. In the office right next door to me here is Jake. Jake grew up in Minnesota also. He works for a major financial institution. He's an internal financial person for them. So what we love about Jake there is his attention to detail and his financial oversight of these projects. Gopal is our third partner. Gopal grew up in India. He's in his mid 60s. I shouldn't say he grew up in India. He was born in India. He moved here in the 70s. He's been investing in real estate for a long time, and he also has a strong technology background. He owned a couple technology companies. So yes, the three of us met just kind of through happenstance. We had each been doing our own separate real estate deals before we partnered. So it was really an awesome partnership when we came together. It just made sense. We hired on Josh and Joe in our office here. They are our operations managers, so our on-site folks report to Josh and Joe. They have a passion for real estate, and they're just incredible partners in this journey. We're super happy to have them on board. We recently took on another person there. His name is Ryan Ferguson. Ryan was brought on board to optimize the experience with investors. So really his job is for investors to have just a great time working with our company, good communication, and just a good understanding of where the company is heading towards and what we're up to. So that's the team. And then we have property managers at every property, and there are our boots on the ground, and they do a fantastic job. So it's an exciting team to be a part of.
Cool. That's great. Well, thanks so much for your time, Ryan. I really appreciate it.
Thank you.
All right. Take care.